All right, everything looking good. We are live. Let's go ahead and get this party started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:02 p.m. Eastern Standard Time on March 29th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Okay, so let's jump right in here. Take a look at these charts. Lots of fun going on in the markets lately. So just getting started with our TNX chart here. So we are on the daily, and we see we came down. We touched both of our 200s. We got a nice bounce off those 200s, and now we're fighting in between the 8 and the 21. So we're above 3 of our moving averages. We're below 1. It looks like we want to test back to the upside. We're coming out of the bearish control zone. We have a hard buy signal. We have multiple green histograms. So it looks like we're at roughly a stage like this when we're fighting back to reclaim the 821 cross, and then we'll go on a push up after that. The real question will be now, we have a high, we have a low, we have a lower high, we have a lower low. When we come back up here again, are we just going to get another lower low and then likely continue the downtrend? Or will we break out to the upside after this? And obviously, the market right now is pricing in lower lows and that rates have topped out. So that's what the market's pricing in. So let's take a look at one of our favorites, the old VIX. So everybody was talking about how the VIX was broken, blah, blah, blah. And then we get the two big candles to the upside, just massive move all the way from under 20 to over 30. 50% spike in the VIX in just a couple of days. Now here we are back down, revisiting the lows once again. We know essentially this 20 level right here was our previous support. We broke down below it pretty aggressively, and then we shot up. But as far as I'm concerned right now, we had at one point in time been looking at like a series of channels or something along those lines. So this is what I'm basically seeing at the moment here, paying attention to. The same way we had that initial big channel to begin with, just consolidating to the downside. Then we had a nice move back to the upside in white right here. And now here we have another channel just moving to the downside in orange here. So we broke down from that green support line or the bottom of that white channel. And then we back tested it. We bounced back up, tested it as resistance. It acted as resistance, pushed us back down to the bottom of the range. So once again, we're near the bottom of the range. So if you're just playing these channels, every time you're just buying support at the bottom and selling resistance at the top, or the other way around, selling stocks at the top, buying stocks at the, no, the other way around. Selling stocks at the bottom, buying stocks at the top. But yeah, we're basically just right smack in that middle zone. Had a nice little move here, starting to lose a slope a little bit, so we'll see what happens. The VIX has not been the most accurate or reliable lately. So U.S. oil, we came down. Everybody was calling for the bottom right here. We knew it was going to push down lower. We got the exact push down to our target, nailed it perfectly. And now we're getting the back test of that little channel. So we're testing it. If we can get back into that channel, we push up to our target, our sell point, our super, super technical red squiggly line. If not, if we get rejected right here, we roll over. The key is to get above this little cluster of resistance. The 236, the 200 exponential, the 200 simple, the ascending channel. All those things right here in that range. So we would expect tough resistance. Heartline as well. So far, though, building up momentum. Bunch of green histograms coming out of the bearish control zone. Hard buy signal above both the 8 and 21. Getting ready to cross those back to the upside. All the people that were really bullish on oil the whole way down are now really bearish on oil. And all the people that were really bearish on oil the whole way up are now really bullish on oil. So very interesting how quickly that flipped. So now looking at the Dow Jones, still right here in the same spot, consolidating at the 200s. We see a bunch of green histograms. We left the bearish control zone. We have a hard buy signal. We're using an awful lot of our momentum, of our indicator oscillators energy to get back nowhere. As long as we're in this range, though, right here between the moving averages or around the moving averages, we don't really have a direction. The truth is right now, we had clear uptrend the whole way up. We had clear downtrend for quite some time, and now this is a consolidation. So one of two things are going to happen. We're going to fail. We're going to break down from here. We're going to retest the lows, or we're going to eventually reclaim this level, retest this previous little resistance highs right here, and then continue to the upside. You guys know I have a base case that would be viable in either of those scenarios. In my opinion, if inflation sustains, if it's persistent, if it continues, we're going to see new all-time highs on lots and lots of assets, asset classes, etc. If we don't see inflation, if we go into some, brutal recession, depression, whatever, doom and gloom scenario, then of course, likely we would break down from here and see, capitulation. SPY is next, exact same thing. There's nothing really to see here. It's just a matter of where we're positioned relative to the 8, the 21, and the 200s. Pretty much everything is right around those levels right now. The SPY is technically on top of all of them, so slightly more bullish. Triple Qs are next. We're retesting that previous high from right here. So we're going to find out soon. Are we going to break through this high and then retest the previous high at 334? Or is this going to be a double top M pattern? We're going to come back down to 200s. We're going to lose support, break back down and retest the lows. We don't know. We don't know. But right now, it looks like we were setting up for some bearish divergence, a lower high on the histograms. But we did push up and start putting in some green ones. So it is possible we just see continuation come above this peak right here. Price action is already at or above the previous high, so that would invalidate the bearish divergence. But we're at the levels where we would likely see this rollover and bearish divergence play out. One thing we've seen lately, though, our bullish and bearish divergence are very, very accurate. But lately, we've seen a lot of bearish divergence developing and then not actually playing out. So that tells me that there's a lot of buying taking place, but not really that much selling taking place, or at least people not eager to sell without some kind of like trigger event, big fundamental, or just a flush down. So IWM next, the Russell. So the Russell, and let's keep this in mind too. Remember what we said. All the people that were wrong early were the ones calling for the Dow and the industrials to lead us out of the recession, or lead us into the next bull market, I should say. Then they were calling for the small caps, the profitless tech, the trash, the Russells, and Russell overperformed. And now what is the new one? What's the new bullshit? We know exactly what it is. It's, oh, no. Now it's tech. Now it's tech. Because rates are going to go back down and tech-free money and growth is going to outperform. And now tech is going to be the winner. So why did the narrative change so much? First, it was industrials. We're going to get us out because hard work and we're going to grind and lots of government money is going to, stimulate the economy and industrials are going to overperform. And then it was small caps and foreign stocks as well. And now it's tech. So why does it keep changing? Which one is it? Is it just about the narrative, or is there anything to any of this? No, it's all trash, honestly, in my opinion. No one knows what's going to happen right now. Every single stock, every single index, just about everything we look at looks exactly the same, give or take. Its position of the 200, slightly above or slightly below. So in my opinion right now, everything is pretty much fair value. I look at the 200 exponential and simple moving averages as fair value over that time frame. So if we have the daily time frame, we look at 200 days past and we say, hey, when we're at or around the 200 moving averages, we're fair valued. If we're above them, we're overvalued. If we're below them, we're undervalued. Other than that, we're looking for momentum. We're looking for direction. We're looking for all that good stuff. But right now, everything's like fair value. So what do we look for? we don't want to just always be like digging through the trash, looking for like the most garbage hated stuff ever. We want stuff like Tesla when it's hated, not when it's loved. We want all the stuff that everybody else threw away that we know is like a legitimate, actual good company, or sometimes cryptos. You heard me. Okay, so that being said, let's take a look over here. So we got the DXY chart right here. This on the monthly. And, let's actually switch this over really quick here and just keep it simple. So this is it. Just a line chart. Super simple. Okay. Downtrend. We just started an uptrend right here in 2019. And then we went parabolic and now we're retracing. We're back testing the previous set of highs. We have some more highs slightly lower than this. So in my opinion, we're either at or around our support area. Previous high, previous high right here. Potential support now seems likely. Or we're going to pull back here again. We're going to test that next high down at like 99. I'm okay with either one. You guys know my deeper retrace is like below 100 slightly. We do know typically the dollar looks like it's topping out, consolidates for a little bit, retraces some, and then usually goes to a new high. So we want to be real careful of that. because we see it happening over and over again. But for right now, we're just waiting to see where this thing decides it wants to temporarily bottom at. Again, super simple. We have a clear bull market. We're above. Everything's blue. Bull market. And now here we are. The 200 simple gets on top. That's us losing strength, losing momentum. We back test the 200 exponential. We get rejected. We're coming down here. We're threatening the lows. We're back down in the bearish control zone. So bears are in control. We see a bunch of red histograms. Slope line is still blue. We're seeing our first green histogram starting to show up. At some point in time, one of two things is going to happen. We know that. We're either going to bottom and put in a higher low and then push back up, and we'll see what happens then. Do we retest the 200 simple and then go lower? Do we break back above and retest the highs? We don't know yet. Or we're going to break down and put in new lows. And we were talking a little bit in the group about what this means, because I think a lot of people want to root against the dollar because like somehow they think, you know, the US having the world reserve currency is not fair, or the dollar's mean, or the US is taking advantage of everyone. And okay, whatever. I don't even care to argue any of those points. But just make sure that you understand what the world looks like when you bet against the dollar and what that's going to mean for the world. Because the truth is, and the reason I say that is, I'm not saying, you know, oh, have a heart. Because if you bet against the dollar and then the US crumbles, you're going to feel real bad. No. I'm not talking about that. I'm talking about the actual condition of the world if the dollar breaks down from here. Not because, you know, I want you to like think with your heart or like feel bad for America or something like that. No. I'm talking about what is going to happen, what the effects are of the dollar dropping. We know what the effects are of the dollar going up. Okay? When the dollar is strong, all the American consumers, which there's a lot of them, and they do love to consume. We're the best consumers. We're the number one consumers in the whole world. We import more stuff than anyone else on planet Earth, any other country. We're second for exports. Nobody ever talks about that. China is number one on exports. United States is number two. United States is number one on imports. So we're number one and number two. So when people talk about the USA and they're like, oh, the gap and the trade gap and the too many imports and blah, blah, blah. Okay, sure. Who even compares? But my point is, we saw what happens, okay? We have the world reserve currency. When they inflate the currency, what happens to those currency units, okay? Previously, let's say we have a baseline of 100 currency units, and then the Fed comes out and prints 40 more currency units. So they increase the money supply by 40%. So now we have 140 currency units, okay? So in the United States, our dollars are worth $1. So when we buy stuff in the United States, we get $1 worth of stuff and we pay $1 for it, no matter how many currency units there are. However, if you live in the United States and the dollar gets strong, like what we've seen happen recently or over the last, you know, multiple years, as the dollar's been in an uptrend for a while now, when the dollar gets strong, like what we saw during the Rona pandemic, what happened? The United States imports a ton of stuff because we still only get $1 worth of stuff at home because everything's priced in dollars. But when we buy stuff from other countries, the dollar is strong relative to those countries' currencies. So we get $1.25 worth of stuff for our dollar. So if the dollar gets stronger, the United States imports more stuff. Okay? We buy other people's stuff. So when we buy that other people's stuff, our dollars go to those countries. So the dollar in the United States gets exported to the country and the goods get imported to the United States. So we essentially export our inflation. That's literally what we do. If you don't understand that basic principle, you have to start over and build everything on top of that. Because what you need to understand is the United States exports dollars. So when those dollars are inflated, they're exporting inflation. Okay, so that's your baseline for everything. So what about the opposite scenario? Because that's what we're really talking about now. The dollar went parabolic. The United States had record deficits, imported record amounts of goods, ridiculous amount of consumption takes place. So now we're seeing weakness. If we break down from this low right here and we start to see those dollars losing value, then suddenly the dollar pairs are going to have the exact same effect as when the dollar was strong. Now their currency units are strong. So remember who the number one importer is. We all remember that's the USA. Remember who the number two exporter is. That's USA also. So remember now, if all those other currency units that are paired towards the dollar get strong, those people are going to buy stuff from the United States because their currency will be strong relative to that dollar. So they'll be the one getting that, 125% buying power instead of the regular 100% if they buy their own goods from in their own country. So therefore, that import, the weakness in the dollar causes strength in the United States markets, the equity markets, because everything's on sale. If you live in China and you want to own stuff in the United States, or actually we'll use something in the DXY. Let's say you live in UK or Europe or Japan, you want to buy something in dollars or in the United States or from the US equity market, you get more of that stuff. You get a discount because your currency is stronger. So therefore, money floods into the United States because those other countries have increased purchasing power, and it drives up equity values. So now you have the United States stock market, major indices going up. You have property values, real estate going up. Meanwhile, what is happening with all the inflation? We're exporting it to all the other countries because we're sending those dollars out. But everybody else is sending dollars back now, pumping up the prices again, increasing the wealth effect. So then what happens? We send those dollars back out. So that feeds the inflation. It's a thruster. It's a supersonic jet engine of inflation that will always hurt the rest of the world more than it hurts the United States. Unless at some point in time, the USA gets to some crazy point where they're no longer, their dollar is just so weak, they just can't even buy foreign goods anymore. And so they just have to buy stuff from inside the United States. So we have to basically arbitrage the gap between what it costs to pay some slave in some other country to make an iPhone compared to what it's going to cost to have, your neighbor go to work in a factory and start soldering, microchips and stuff. Probably not going to happen, but let's be real. So that's really how it works. So if we see the breakdown in the dollar that everybody wants, the weakness in the dollar, the collapse of the dollar, the epic destruction of the dollar, the de-dollarization of the world, if we see that taking place, fully understand what that means is that we're going to go into a ridiculously inflationary environment. I'm talking about gold. I'm talking about U.S. equities, assets, all of these various different things, the stock market, all this stuff. Now, all this is taking place also while many of these other countries who also have, central banks are doing the same thing, tightening rates, inflation, creating money supply, all this different stuff taking place. So it's still all relative to each other. But looking at the DXY, we see the dollar's relative strength to the other stuff inside it. So it is possible that Japan is still in terrible shape. Meanwhile, the dollar is collapsing, but somehow like Europe benefits from it and England benefits from it, etc. So again, baseline, if the dollar breaks down, and we know if we look at the dollar compared to gold, they're inverse each other. And gold is like essentially the commodity that stores the value to buy all the other commodities. Okay, so you don't need gold for anything in particular. Like I'm not using gold to like make stuff out of. I'm not crafting my own jewelry. I'm not creating parts for computers, smelting little bits of gold. Like it's not happening. Okay, so when I buy gold, when a normal person buys gold, when an investor or something like that buys gold, they're buying it to preserve their purchasing power because maybe they're like, oh man, like corn is really going up in value a lot and I need a lot of corn. So I can't really just go out and buy like 10 tons of corn and have them dump it in my backyard. So instead, I buy a bunch of gold, it holds my purchasing power, and then I can trade that gold for corn, and it's going to hold up even if the dollar diminishes or the euro diminishes or whatever the situation is. It's protecting your purchasing power to buy these other commodities. And when I talk about commodities, I'm not talking about just physical stuff. I'm talking about energy and stuff like that as well. So if we look at energy, if we look at gold, if we look at U.S. equities, if we look at some cryptocurrencies, let's just say Bitcoin for now, whatever, property, etc. If the dollar breaks down and gets weak, the money floods in and pushes up the prices. The inflation comes from the prices getting pushed up and the wealth effect. That inflation gets exported to other countries. Remember, the U.S. exports number 2, okay? And then we also import goods from other countries. Remember, we're number 1, okay? And then the whole cycle just keeps going over and over again. So that pushes up equities to new all-time highs, in my opinion, if the dollar breaks down from here. Now, is that a good thing? Is that a bad thing? Whatever. That's all up to you. You can figure all that out on your own. But it's very, very, very important that everyone understands what this means. Because the narrative right now is that when the dollar breaks down, that suddenly all these investments in other countries are going to be really good. Like the emerging markets or China or whatever, whatever you want to say the big like non-USA players. But the truth is, it's all about the relative difference, the offset between the weakness in the dollar and how much extra money flows into the United States. Because we know what happens when people are scared. We just saw it. They run to US treasuries. They don't run to some crazy other country's treasuries. They're not running to buy China treasuries. They're not running to buy Russia treasuries. They're not going to India saying, hey, can we buy some of your treasuries? No, they're buying US treasuries. So just remember all that. Keep that in mind. And that gives us a much better baseline for what potentially looks like. So if we see the dollar breaking down from here and going much lower, over time, over months or over years or whatever, we know what to expect. Continual inflation, everything just getting more expensive just in general, including equities, assets, whatever. The key is to make sure that we can preserve that purchasing power so that if we inflate 10% per year, that we make at least 10% or more return on that so we don't end up negative. Because I'm going to tell you something right now. This isn't some secret, okay? I'm not going to get a knock on my door for revealing the secrets of the universe, okay? There's a reason that interest rates go up. It's because there's less money. Okay, that's why. If I literally come to you and go, hey, I need to borrow $20, and you go, hey, it's going to be $30. Like, you got to pay me back $10 VIG interest. I'm like, that sucks. And then I literally ask the person standing next to you, hey, let me borrow $20. And he goes, all right, just buy me a Coke or something. Like when you return it, cold soda or whatever. $22, whatever it is. So of course you're going to take the $22 loan. So if there's nobody else around and you need this $20 bad, you're going to have to take the $30. So the demand relative to the supply obviously is what, drives those rates. So the Fed has been, Federal Reserve, AKA central banks in general, have been manipulating rates. They've been manipulating money. Money is one side, or I should say currency, is one side of every transaction. So if you're always buying things in currency units and then we're manipulating, the world, the bankers, whoever, not me, that scum is manipulating the price of currency. Well, they're manipulating everything then. Everything is being manipulated because currency is half of every trade. So understand that what's taking place right now is going to be very crucial for what takes place going into the future. Now, the other side of that coin is, sure, everybody gets scared, runs to the dollar because we see a collapse in global banking, or we see, global recession starts hitting, or, other countries in Europe are on fire and like rioting, or, any of those things. So keep your eye out for like crazy stuff happening outside the USA. I mean, I know it's terrible here. It's like, oh, there was this thing and 5 people died, and it's terrible. It is 100% terrible for sure. But let's not pretend like there's not other stuff going on in the world right now, and the US is still the safety place. So when it's all said and done, we know what's going to happen. If we break down from here, we know the prices of everything's going up, inflation's going up, new all-time highs on anything but XRP. Just kidding. That was a little kick in there. And we know if the dollar continues to get stronger, well, we're probably just going to continue on in the same trend now, and likely we're going into some form of uncertainty or, recession, depression, whatever. So that being said, hopefully that helps with like the correlation and what to expect, and why actually the situation that most people are calling for is actually a lot worse, and still they probably will not even be able to correctly trade it, even if it did happen, because everybody just presumes, oh, the US just falls apart and nobody can afford food anymore, and it's just a complete trash country and people don't even want to go there, and that's just the end of it. Shucks, it had a good run. Well, I mean, what's the best thing we could do? Let's compare it to the last world reserve currency. Let's compare it to the last global, monetary system. Well, who was that? That was UK. I mean, they're not doing hot right now, but you could argue a lot of that's their own fault. But I mean, they had the world reserve currency before. UK is still like, they're still kicking. They're still pretty popular. They're still doing things and making stuff, So, I mean, they didn't just like fall off the face of the earth. It wasn't like, oh, they're no longer the world reserve currency anymore. I guess that's it for England. Yep. They're taking the stilts out and it's just going to sink back below the earth's surface. It's going to go back underwater like Atlantis did. Yeah, okay. God, people are so stupid. Glad that we have a nice community right here of people that either are smart, free thinkers, or at least like doing some kind of learning. Because the whole ignorance is bliss thing just blows my mind. Oh, you know what? Also, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please don't research, trade responsibly. All right, so what I want to do right here is I want to look at a super fancy chart. It's actually like the most basic thing ever. And all we're doing here, this is super basic, okay? And you're like, this doesn't even make sense, what you're about to explain to us. Just listen. Okay, so we took gold, all right, which is denominated in dollars, and then we're dividing that by the DXY, which is the basket of currency relative to the dollar. Okay, and what we get here is essentially, you know, a big range, a channel, a sideways trading range with a heart line here in the middle. And, you know, we just bounce off the heart line right there. So you could argue that, you know, when we're at the 200s or when we're at the heart line or something like that, like historically, we're at a pretty normal level. So we see at like the trough down here, we went down to 0.36. And then we see at the peak right here, we went up to 3.0. So that's basically our like range going back to like the 1980s on this particular measure. And the only reason we're doing this is so that we can just make sure that having the dollar as the denominator when we're looking at gold isn't giving us a skewed picture. Because if we look at it in Canadian dollars, or we look at it in euros, or we look at it in, you know, Turkish lira, it looks completely different. Gold does. It's at, you know, new all-time highs in many of those cases. With USD, it's near the highs now. I mean, it wasn't recently. But when we look at this historically right now, gold's not like particularly overpriced or particularly underpriced when we take everything else into account. So just something for perspective right here. And if we really zoom in and look at it on the weekly right here, you know, we had a nice run up above the 200s. Well, what was this? This was 2019. This was the 2016 low. So we basically had it, you know, it spiked down relative to other currencies, consolidated in that range, broke out above like that 1300 level. This was obviously the Rona dump right here. And then once we got above like that 1300 level relative, you know, we went up to new all-time highs, which in US dollars was around like 2000. And now in US dollars, we're back at those all-time highs again. But when we look at, you know, the other currencies relative to this, aka the DXY, that gives us basically a different perspective. Says, okay, some of these other ones are off a little bit more, so gold could potentially have some room to run. 200 simple on top, so we're losing some momentum. We're back testing it as we speak. We have a low right here and a higher low. We have a series of higher lows going back. Overall, this looks good. Gold looks strong. So Tesla is still consolidating at the 821. We see the blue slope line is substantially above our heads. We see a bunch of energy is getting spent right here. Well, we're not really doing anything, spending energy to the upside. So in my opinion, it's just a matter of time before we push up here again, retest the 200 simple, print bearish divergence, and then this rolls over, collapses, falls down, whatever you want to call it. That's what it looks like is going to happen. So Microsoft, we took out that previous high right here. We've been consolidating since. We're obviously at some key resistance as it has taken us, you know, a couple weeks consolidating. We still haven't gotten above it. We very clearly have bearish divergence if we roll over right now. Now, if we just print a couple more green histograms and start moving back to the upside, we can invalidate that bearish divergence by putting in a new high on the histogram. Or here we see on the blue Stoch right here, that's our peak. And then there's our peak, substantially lower. We broke down. We're holding on to the bullish control zone for now. But if we don't take out this previous high, again, we're going to have bearish divergence between these points. At which point in time, it doesn't have to be something crazy. It's not like, oh, and then it just goes straight to zero. No, we just come back down. We retest the key level. Obviously, this is pretty close. So if we do break down from here, it's probably going to be the 200s. Maybe just a 200 exponential, and then we run. So Apple is next. So Apple at that hard resistance right here. Last time we shorted it, it was a cha-ching moment beautifully. We did have to cut that trade a little bit short, but then rode all the way back up to the top. So the real question is, if we start to see a little weakness right here, we're very clearly, again, starting to show that ass. A little bit of bearish divergence starting to show up right here, starting to roll over, lower high right there at resistance. And then macro, we have a lower high. So we're just putting in lower lows and lower highs over and over again. And Apple is, you know, one of the quote unquote best. And the reason that Apple and Microsoft are so important is because they're just massive market cap relative to some of these other big names in the indices. So Google is next on the daily. Had a nice little pop right here finally after it's been such a little laggard. Didn't quite get up to the top target here, unfortunately. So still a little ways to go. Back testing the 382. Maybe reloading in this position. We are in the bullish control zone. We are again potentially showing some weakness right here. We don't have that same bearish divergence on Google. We are above the 382, both 200s. You know, I think there's still a pretty high likelihood we hit it to 117, which from where we're at right now is like 15, 16% move to the upside, arguably 17. So I don't know. This one still has a little meat on the bone potentially here. I may end up adding to that position. Meta still moving to the upside on top of the 200s at some point in time. It doesn't have to happen. Maybe Meta just runs and it's just great now and it's amazing. But remember, everybody hated this. It was complete trash. They were just burning money. And then all they said was, oh, we're just firing people. We're cutting costs. We're being efficient. You know, we're just going to can 10,000 people every time the stock starts dropping to pump it up because those are rookie numbers. But the truth is, once you get above the 200 exponential and simple, and we'll go back here. Let's look at another example so we can see what often happens. Okay, so here is our dump right here from 2020, the Rona dump. We get above the 200 exponential and simple. Look what happens right here. We gap up, okay? Nice little bounce, move up here, and then we get one attempt, a big push down almost to the 200s. Don't quite get there, gets front run, and then off to the races after that. Here we see the same exact thing. And you're like, oh, this is so weird. The same thing keeps happening. So here we're right here. And then suddenly we gap up to the 200s. We consolidate for a bit. We start to take off right here. And then what do? We break back down, retest the 200. And then again, higher lows off to the races. So what we're looking for and what we know is going to happen, we know it for a fact. At some point in time, the market is going to say, hey, let's just make sure this is the real deal. And there's actually buyers. And so what do? You take profits, see what happens. The market comes down. Then eventually the buyers step in at the 200 exponential or 200 simple, or maybe they don't. Maybe they don't step in at all. I don't know. So if we're going to come down here and close this gap, that's a 200 simple. That's also our fib. If we're not going to close the gap, but we're just going to come down to 200 exponential, that's about like 169. But we will come back down and attempt to test those levels. And if you think this was the attempt, this wasn't the attempt. You don't have little itty bitty candles like this and they're like, hey, let's just kind of take a little walk down here to the 200. No, I'm talking about like a dump candle. I'm talking about a gross check, a shakeout, a capitulation looking candle where it's like, oh my God, why is everything selling off? And people are Googling it. They're like, oh, what's wrong with Meta? Oh my gosh, is the metaverse even going to happen? That's what the big selling looks like. So I expect that at some point in time, bearish divergence, all that good stuff. So magma, we're on the A. So Amazon here, so got the initial push up nicely, got a higher low right here, pushing up in the middle of our next move here. Beautiful retest of the 886. Oh my God, the 886 actually do something? Wow, that's crazy. Still not giving it credit though, but it's good to see it's actually still like relevant every once in a while. But yeah, regardless. So we bounce up here. We're at a bunch of resistance, 200 exponential and simple, slightly higher at 108. So we're talking about an 8% move from right now. Looks pretty likely. 821 bull crossed. That's where we're going. We're going to 108. The real question is when we get there, can we get up to 112? And then if we do, we start looking at like 123. So, I mean, it's not bad. It's like 20 something percent to the upside. It's not great though either. Let's not pretend here. You know, obviously if you would have just got in the trade initially, it's a lot juicier. But it's not bad. Underperformer for sure. Underperformer for sure. And I mean, realistically, all the growth for Amazon's coming from cloud. They net lost money last year. So like Amazon, after all these years and doing, you know, $500 billion in business, they're losing money. And like their real growth is coming from like cloud. I mean, just buy Microsoft, I guess, right? Just buy Microsoft. Yeah. Okay. So why would you buy Amazon? You wouldn't. You would just buy Microsoft. So congratulations. You don't ever have to buy Amazon because Microsoft's just better. For now. All right. That was easy. Why didn't someone just tell me? So Bitcoin on the daily. What's up, Alex? Good to see you. Nice calls on Neo and Baba over the weekend. My man, we're getting there, okay? Because we nailed it on Neo. Okay, you guys probably got a bigger entry or better entry than I did because I'm an idiot and I forgot to make the trade after we talked about it. So I got late to the party, but caught the move. So Neo, beautiful. Baba, beautiful, beautiful. And then also Can we say it in the chat? Can we talk about these sweatpants? Okay. I've been banging the drum on Lululemon, the Walmart sweatpants company or whatever. I think they make socks too or something like that. But exclusively offered at Walmart. Apparently they're working out some deal with the dollar store. They're going to be able to get offered there as well. So some more discount merchandise if you're into that. But anyway, popped off today. Ba-boom. Earnings up 15%. We called it. We closed the gap. We did everything. But we'll get there. Calm down. Calm down. So we nailed it. What a great way to wrap up the first quarter. I mean, we slayed the whole entire quarter. Then we just took some easy plays on Bitcoin, and obviously we crushed it, and then jumped in on some of these other trash altcoins, and they were pretty good too. And then, you know what? We've been kind of lazy this last little week, been doing a little rebouncing, kind of taking it easy, looking for the next one. And then boom, the market was so gracious as to bless us with some more winning trades. 15, 20, whatever percent moves. Quick. I love it. That's what we want, guys. We did have to sit in that Lululemon trade for a little bit, though. I'm not going to lie. So Bitcoin, we'll get to all that. I do have those on the look-see for today. See where those are going. But Bitcoin on the daily, we did get back up here and closed at the highs again, retesting those highs. So we have to be careful, you know, that this doesn't just roll back over and print some little micro bearish divergence between these points. We are basically at that same point almost exactly on the histogram for the TDMACD, and obviously substantially higher. So we're already showing like some bearish divergence between that. Here, I consider that as part of the move. We'll see. Obviously, we longed through here. We took profits through here. I still could go either way. We're at a hard sell right now. We left the bullish control zone on the Jewel Thief. So that tells me that's it. We're done. We're done. We're gone. Hard sell signal. Last time that happened, let's look at our last two times. Here we had the hard sell, but we didn't exit till right here. So we'll look at when we left the red. Here we had exited right here, and then we got the hard sell shortly afterwards. So here, this was our basically top, but we didn't actually get the sell signal by leaving the bullish control zone until right here. So we had a nice little pullback, nothing crazy. I mean, not counting the wick to the upside, about 9.5% pullback, nothing crazy. Bearish divergence, and then the breakdown. We were able to nail that one. Again, same thing. And then we were able to long off of the 200 simple. So that was 20% downside. We avoided. I was not shorting. I'm not shorting into the 200 moving averages. It's just not worth it, especially as we're confirming into a bullish trend. If I'm shorting something, I'm probably hedging a spot position because I don't want to sell my physical. And by physical, I mean magic internet money. So yeah, whatever. But anyway, so that was, what were the sells right here? So that was that one right there. And then this was the previous one right here. Again, we left the bearish control zone. We pushed up higher, and then we got the hard sell, and then we broke down. Again, not too crazy. That wick was the majority of the move, but about an 8 to 10% move right there. And then the one before that left the bearish control zone, pushed up one more time, hard sell signal right before the capitulation happens. Beautiful. And again, we dodge that 25% party. So we're seeing that same signature start to show up right now. We expect when we see that start to show up, we expect a bunch of red histograms, then a push up on green, an attempt to push the trend back to the upside. And then when and if that fails, then we would expect a rollover. So that's what it's looking like to me. I expect us to get up here. I would really like, look guys, I don't always have to get my way, but it's just easier if we do. Okay, so we have some targets up here. We're going to look at the futures chart next, but we have this 0.5 retracement from the all-time high to the recent swing low. We're basically at or above the 382 right now. The 0.5 is right here at 32,000, like 775. We might as well just go there. Might as well just give Critty what he wants, okay? The whole world's going to be happier if I just get my way. And you guys too, obviously. We deserve it. We deserve 32K, so we'll see what happens. Seems like there's a good possibility that we're going to head up there, and then we can start talking about deeper retraces and potentially revisiting the lows and whatever. But for now, we know higher lows and higher highs. We're in an uptrend. That's beautiful. The uptrend is accelerating. Here we see this little lackluster slope here in blue. Now we see a much more aggressive slope here in white. And then, you know, maybe this is going to be our low right here. And then this is what we call the full-on parabola. Well, not quite. It's like straight up is the parabola. But, you know, that's basically what we're looking at. If this area holds right here and we just keep going to the upside, I mean, we just go straight up to 0.5, And then at that point in time, you know, the parabola is likely going to roll over. But that's what we're looking at. 32,000, maybe 666, call it 750, maybe 33, whatever, but somewhere around that level. The 1.618 is actually like right here as well. So maybe it's just going to be 30K. But I do expect we're getting very, very close to topping out for at least now. Okay, so here we are on the futures chart. So this is where we actually have it already plotted out. So I should have just went to this one first. But again, very similar signatures right here. We did bounce the 200 simple perfectly, got back on top of the 200 exponential. We see a series of higher lows and higher highs. We have the macro 236 from the breakdown. This was a 236 retrace, lower high, breakdown. And now here we're looking at potentially a backtest of the 236 in white and green. One is the Rona low. The other is the macro low from 2018 or was it 2019? Yeah, 2018. Yeah, because it was like right around the end of the year. So again, that's our little target to the upside. That's our little red box selling. So we were able to close that gap perfectly. We were able to long it perfectly. We were able to ride it up perfectly. And then, you know what? I jumped out, took some profits a little earlier than I probably should have, but I'm always about locking in those gains. So, and I'm not particularly, to tell you the truth, I always like to lock in gains, at least part of my trade. But I don't have strong conviction one way or the other. I really don't right now. I mean, I could build a case for bulls or I could build a case for bears. We could build a case where we have inflation for the next 10 years and it sucks and just everything goes parabolic. You know, your $500,000 house becomes worth $1 million. Your, you know, $3 loaf of bread is worth $10. Your, you know, $5 eggs are worth, or wait, what are eggs now? $20? Your $20 eggs are worth $100. Just everything's like parabolic. So just make sure that whatever the inflation rate is, that like you're not just making nominal gains, you're making real gains. Oh, and this is what I was going to say earlier, and then I don't think I ever wrapped up my thought. If someone is paying you a bunch of money, aka a high interest rate, to borrow money from you, or for you to borrow money from them, it's because there's a lack of supply and a lot of demand, which is driving up the rates. Now, whether that's inflated or manipulated by the Fed, well, we know it is. All the central banks, we know that for sure. Currency is literally designed specifically to inflate and manipulate. 100%. That's the only reason that you have currency units that are not tied to gold or whatever. So that being said, the reason the money is more expensive, the reason the rate is higher is because it's harder to get. There's less of it. There's less people standing there holding that 20. So if that's the case, if the central banks or Janet Yellen, let's say, okay, the old Treasury Secretary, if they're giving you 5% for a treasury, it's because inflation is through the roof. They're giving you that 5% because inflation's not going anywhere. The reason that you can't lock in super long rates right now at like high levels is because the market's not convinced that inflation's going to persist. Once the market decides, okay, actually this inflation has been here now for 3 or 4 or 5 or 7 years, however long it takes, and it's like it's still at 3% or 4% or 5% or, you know, whatever, eventually the market adjusts and those rates will go up on the long end of the curve as well. The reason the curve is inverted right now is because the market doesn't believe that inflation will persist. But there's a super easy explanation for, hey, why the next 10 years have tons of inflation. Who benefits the most from inflation? A debtor or a deadee? There's really only two people. There's somebody that borrowed the money and there's somebody that lent the money. There's two sides of every trade. So in inflation, let's say 50% inflation for 1 year. So everything that costs $100 at the beginning of the year costs $150 the next year. So the people that benefit from that inflation are the people that owe the debt. The debtors are the ones who benefit because they can then pay that debt back with less actual buying power, because the $150 a year from now was the equivalent to $100 now. So if I have $150 in debt a year ago, and then, $100 in debt a year ago, and then the currency inflates and we go up to $150, buys $100 worth of stuff. Well, now I can buy that debt off, that $100 I owe, for $100. Well, it just inflated by 50%, which means I get a 33% discount on paying off my loan, because 50% and then the 30, you guys get it. You can do math. So who has the most debt on all of the whole planet of the earth? Okay. Who has it all? All the central banks. The central banks have all the debt. They've got all of it. Ridiculous amounts of debts. The government, whatever you want to call it, however it's structured in your country, whatever. The governments have all the debt. The central banks have all the debt. They benefit the most from high inflation. And what is inflation, or creation of currency, is basically just tax. But instead of saying, hey, we need 50% of your paycheck, you're like, I don't know, that's an awful lot. And then you're like, all right. And then you're like, all right, now we need 60% because, all the spending, sorry about that. And then people get mad. So what do? They tax you without you agreeing to it. I mean, what are taxes? They're voted on theoretically, your representative votes, and they have to accountability, whatever. And then eventually it's like, oh, damn, I wasn't supposed to go up because I don't make $400,000 a year and somehow I'm paying more in taxes. Well, inflation is just another tax. It's just a tax you don't agree to. So the people who benefit the most are the debtors. The people that have the most debt are the governments, the central banks. And what is it really? It's just a tax. So it's really in their best interest to keep inflation high for like 10 years, as we have record ridiculous amounts of debt, and they inflate away their debt. They pay it off over the next 10 years with drastically reduced buying power via currency. It's simple. So just make sure that the central banks actually want inflation to go away. Just make sure that what they want is what they're telling you. Because I promise you right now, I promise you that when they're like, we're going to get this inflation under check. We can't have all this mean inflation. We got to make sure that these inflation numbers don't get entrenched. We don't want people's expectations for inflation to go up. Did they ever say they actually want inflation to come down, or they talk about expectations? Okay, because they don't want expectations to get unhinged and cause like a spiral of inflation. But I promise you, Jay Powell is sitting on his chair, on his throne of swamp ass every single night, just leaning back, enjoying that inflation blowjob. Because that's exactly what he's getting right now. The longest one in history. Well, maybe not technically, but we'll see. So yeah, the Bitcoin to the spot and then roll over. At the ETH, it's doing nothing. The exact same thing, consolidating those levels. It's just, ETH is nothing now. No one even cares about ETH. It's literally just another random crypto. Total market cap on the weekly, still banging her head on resistance. The longer we consolidate here, the more likely we are to break out. If we don't break above this level, it's just money shuffling around inside the space, but there's no new money coming in. So that's what it's telling us now. There's no actual new money coming into crypto. It's just kind of shuffling around. Oh, sorry about that. Let me clear my throat. But we are picking up momentum on this. We're back above all the moving averages. We have all grain histograms. We're above the blue slope line. We have powerful stochastics angled to the upside. We're inside the bullish control zone. Now you have to be careful though, because we're in the bearish control zone right here, and then we're in the bullish control zone right here. So we used up all the energy from the bottom to the top. Started from the bottom. Now we're here, but we're just back right here. So that's not actually like great. We're using up an awful lot of energy, but we're not going anywhere. Now it doesn't mean we can't just have like a couple big candles right here and it's like, all right, we're fine now. But this is a very, very important level right there. You can tell because I drew a yellow line. Bitcoin dominance on the weekly. Oh, guys, I just found out too. Apparently, a lot of people can't tell when I'm being sarcastic. So if you're ever confused or not sure, let me know, okay? Because somebody like went off on me in the comments because Lululemon is not sold at Walmart, that I don't even know what I'm talking about. He's like, you need to do your research. You don't know what Lululemon is, idiot. It's not sold at Walmart. I'm like, wow. I'm like, I mailed you a book, okay? I got your address. I found it. I tracked you down, and I mailed you a book, and it's called Sarcasm 101. And I know what you're thinking right now. You didn't get my address? See, that's it, though. That's that sarcasm. That was it again. That's why you need the book. So keep your eye out for it. It's on the way. See? I did it again there. You didn't fall for it, though. Bitcoin dominance on the weekly. Very, very important. This is against everything, okay? Still trading in that channel. Green support, yellow resistance, or orange, whatever that is. Every time we get up there, we bang our head. We roll back over. If we break out, this means Bitcoin is taking market cap from all other cryptos. Stable coins, shit coins, coins we never even heard of, okay? If we roll over right here, though, that means Bitcoin's losing market cap, which means those altcoins are probably pumping. All right, so here's our magical, special, group only, awesome, original Bitcoin dominance chart. And it's the same exact Bitcoin dominance chart, but we took out the stable coins. So we can see how Bitcoin's actually performing compared to like other cryptos that are not a stable coin. And the idea being that when money's in stable coins, people are risk off, they're scared, they're just holding cash basically, or crypto equivalent. When they're risk on, they're on in crypto. When they're really risk on, like full on degen trash, that's when we're in those shit coins, okay? So that's what we're looking for. We want to make sure that before the degen trash rally happens, that we're in it. We're way up in it, okay? Balls deep in it. And, you know, that's how we use this chart. So right now we see Bitcoin went parabolic. We talked about this consolidation here and how it was going to break out and Bitcoin was going to destroy market cap of all these trash cryptos, or AKA just outperform them. And it did. It did very nicely. But now here we are, slightly off of that next resistance, just kind of consolidating. Used up quite a bit of energy to get to this level. So we got to see what happens from here. If we break down from here, alts are probably taking off. If we continue to the upside, alts could still be doing okay, but Bitcoin is probably surging. Or we're rolling over and people are selling their trash altcoins and selling less Bitcoin. But you guys already know that. I wasn't really going to look at a bunch of cryptos here today because there's really not much to see. Let's look at XRP here. All right, so we're talking about this a little bit in the group. We had these old trade setups from a while ago. They played out nicely. Obviously, you know, that was the big push up here, the little blow off. We came down pretty aggressively. Back tested the 200 exponential and simple as we talk about. We held support. Back tested the descending resistance. Back on top of the 200s, back above that descending resistance line from all the way at the peak right here. And that was our big candle to the upside. This was our nice back test and hold. And now here we are seeing continuation. And this obviously is full on parabolic. So we did blow off like half of that last candle. So we have probably topped right here, at least for the short term. What we want to see is where do we come back to? I would love to see us hold at 47, reload. That's 47 cents. I know. You're like, $47? No, it's 47 cents. It's XRP. So it's obviously trash. We want to see it hold around 47, whatever here, the green line. And then after that, we likely get that push up to like 62 to 65 cents. It is definitely overextended now, but also it's been getting its dick kicked in for like years. I mean, arguably forever because it didn't even put in a new high. So, I mean, XRP really has been getting its dick kicked in since 2018, just completely getting stomped. I'm surprised it's even alive at this point in time. New lower high, which means the cult is dying. No one wants it. It's trash. It's garbage. It's melting down. And then this is like the first sign of life, the first positive thing you could ever say about XRP, arguably, but definitely recently. So probably it could have some legs on it. Could have some legs on it. You don't want to just start calling the top on something the second. This thing has been getting beat down for so long, and it finally just broke out of that downtrend and looks decent. I just don't think it's a great time to bet against it. So, but one of the group members, obviously I talk a lot of trash about XRP because, you know, obviously the chart looks like trash and it's complete garbage crypto. But that being said, the setup looks nice and there's some meat on the bone. I'll play in the mud. I'll play in the mud. All right, let's talk about BNB, Binance coin. So this thing had a pretty hardy sell-off there with like the announcement and everything. Not bad, really, but we know this has already been on thin ice for a long, long time, and probably is going to go to zero really soon. We know what happened recently is essentially, imagine you have like a brother, sister, or two brothers or two sisters or whatever. Now imagine they are like petty as fuck, okay? Like the pettiest. Like they'll fight about anything. And they're not like brother sister where it's like, oh, we're fighting and then we're best friends afterwards. No. I'm talking about petty, like holding grudges for like years, decades, whole lifetimes. So that is the regulatory agencies inside the United States. That's the CFTC, and that is the SEC. So we have the commodities and we have the securities. And then we have the two commissions that regulate those two things. And Gary Gensler, the head of the SEC, has basically said that Bitcoin is a commodity. Everything else is likely a security. And there's a vested interest in these regulatory bodies to regulate these things. They want to regulate it because what that means is when they regulate something, it means they are the mob and they get to extort money from it. Because that's what they really do. They don't ever protect anybody from anything. They don't ever like save the consumer from getting scammed or losing money or anything like that. No, they wait till stuff blows up and then they go in afterwards, you know, with the long dick of the law, and you either pay them or they fuck you. That's it. That's all there is to it. So they're basically just extortion rackets. So when one of them goes after something and the other one wants to go after it or whatever, they're doing it because they're trying to send the other one a message like, hey, this is our money, this is our loot, this is our score right here, so back off. So what just happened is the SEC has been calling Bitcoin a commodity and everything else a security, and they're starting to crack down on everything. So the CFTC just came out and said, actually, Bitcoin and Ethereum are both commodities, and we're going after Binance for, you know, basically like illegal commodity practices. But obviously, Ethereum is not a commodity. You would have to be an actual brain dead retard to think Ethereum is a commodity. I mean, they did like a pre-mine, you know, they advertised that it was going to go up in value. It was very, very centralized for a very, very long period of time. And you're like, but it's not centralized anymore. You just don't understand. Okay, sure. That's fine. So if I go out and murder somebody and then the cops come knocking on my door and they're like, hey, you murdered this person and we have proof. And I'm like, yeah, but I'm not murdering people anymore. They're not like, oh, okay, well, don't worry about it then. Just go about your business. Nice to meet you. No, you still did the thing. You're still a guilty murderer. So it doesn't help at all that Ethereum is like, no, we're good now. We're not doing that kind of stuff. What about the pre-mine? That's huge. That's massive. So it is 100% a security, and it's an unregistered security. So everybody's like, this is great. This is huge for Ethereum. It's amazing. It's a commodity. We knew it the whole time. No, you're dumb. But I mean, we'll see what happens. I'm sure. Maybe I'll just be wrong. This one time, this will be the one thing I'm wrong about. All right. So anyway, BNB, complete trash, obviously. Looks okay, though. Still on top of the 200s for now. Still putting in higher lows and higher highs. We obviously have the range we're trading in, that ascending channel. If we lose that 382, that 236, that 0, whatever, we have this massive air pocket down to $40. The most dangerous thing in the entire crypto space. Because if we go back here in time and we look at where Binance went from $40 up to $200, this is on a daily chart. This is like 3 weeks from $40 to $200. So there's no support. There's nothing built up. It's just a massive air pocket. Matter of fact, if we just go to the weekly, it's basically 2 weeks and a half worth of price action. So if we get back to that level again, which we were very, very close, started putting in this little Adam and Eve top right here. We were very, very close. Got away from it now, but we know a downtrend, an upward consolidation in a channel, and then we break down and resumption of the downtrend. That's your typical A, your B, your C correction. Only in this case, the C takes us straight to zero. We'll have like $40, but close enough. So yeah, BNB is definitely trash. CZ is definitely a scumbag. And the regulatory agencies are extortionists fighting over who gets the bounty for extorting the trash crypto exchange. Yeah, so awesome. And you're like, yeah, of course it's trash. We know it. You said crypto, right? Come on, guys, don't be mean. Some of these cryptos are legit. They're changing the world, guys. Some of these cryptos are good stuff. All right, so gold hanging out at the highs, 1960 right now. I mean, we got up to this level quite a few times. We haven't been able to get through it. The longer we consolidate this level, the more likely we are. I mean, we don't really have like a hard resistance, but you know, it looks okay. It looks better that we're here than down here or down here. but it still doesn't look amazing. It's starting to look much, much better though. But as far as I'm concerned, this is still just a massive consolidation. It's basically useless. That's our high, that's our low, and we're basically just chopping between them in like what is arguably a descending channel right here. And we're like at or in the process of breaking out. Not bad. Silver is pretty trashy. Again, it has a descending resistance line. It's not even close to those previous highs from that last little bump up right there. So it's really got to get above like $25. But since it doesn't actually serve any purposes, they don't do anything with silver. It's just like shiny and looks cool. Probably not going to happen. Probably goes to zero. All right. So on to some winners here. So yeah, I was a little late to the party on the Neo trade. Meant to get it down here when we were touching tips with that 618. But on the macro, this has been our target for like 1,000 years. Or what has felt like 1,000 years. I mean, we went on this massive parabolic run to the upside. Beautiful retracement. And then from our previous swing in March of 2020, the Rona dump, all the way up to the all-time highs. And we have retraced 61.8% of that. And you guys remember this blue line right here. And it might not work out like this, but it was a hypothetical scenario where we put in the 1, the 2 retracement, the 3, the 4 retracement, stay above the 1, and then we go off on a 5, and this thing just goes parabolic. Maybe not, though. Probably just goes to 0. I don't know. But anyway, we had a nice little run up here already. So I was a little late to the entry. Got in like right around $9. But already surged since then, which is beautiful. So what we got to look out for is where's our resistances. So we have this little channel right here. It's not like amazing or anything, but pretty clear support line right there. So we would expect that to act as resistance at about 1050. And then after that, it's another retest of the 0.5. So we retested it here. We retested it here, lower high, broke down to a new lower low, a macro low. And now we're pushing up here. If we can consolidate and push up to the 0.5 again, maybe we can start, pushing up here and making some progress. The real goal, though, we know what that is. Well, there's two. The 200 exponential and simple, 42% from where we're at right now. 42% from where we're at right now. Man, we should really clean up this chart. We need like a housekeeper that like comes in and just like takes some of these lines off this damn chart. There's no possible way that anyone can even see what's going on here, including me. So from that low, this little line right here, that little resistance was a 236. So we banged our head on it once, banged our head on it twice, went down, put in our macro low. So that looks like a pretty important level. We see some confluence here with the white 382 on the way down, lines up with the 382 in orange as well. And realistically, that 236 in orange, the heart line of the channel, everything is just kind of like meeting right here at about 1337. So, all right. So what if you missed a trade? What if you were like, Neo's trash, bro. I'm all about Tesla. What are you talking about? And you're like, man, I should have took that trade now in hindsight. Let's see if there's still enough meat on the bone for it to be worth messing with. Or if you're just too late to the party. And you should just go buy Rivian, loser. Seriously, don't buy that trash. 17% downside if we go to a new low or 35% upside. So 2 to 1, you're trading counter trend because we're in a downtrend. There's just nothing there. There's no meat on the bone anymore. What about if you just tightened up the stop and said, actually, as long as we have the 821 bull cross and we don't take out that swing low from right here, like I'm okay with it. 8.75% with 35% upside. Now we're talking 4 to 1 risk reward ratio. Okay, there's a little bit of meat left on that bone for you. See, it's not all bad news, guys. Act like you missed out on the trade and now you can't buy no Neo. I mean, it's definitely trash, though. And then, obviously, the big boy trade setup. If we really do burst through here 1 time, 2 time, 3 time, get her down. We're talking about like $18 on this thing. We're at 9 right now. It'll never happen. 86% upside. You don't deserve it. None of us do. Baba's next. Okay, so the hypothetical made-up scenario that might end up being an inverted head and shoulders looking pretty juicy. So we got the beautiful entry off of the 236. We got that giggity gap up right here. We're looking at 40% upside right there. We're already about halfway. Okay, and we had a nice setup here at 3 to 1. Realistically, though, Papa's only playing in the Alibaba pond just to really get this trade right here. We want the back test of the 618. We want the breakout of the inverted head and shoulders. We want the measured move to the upside. Where's it going to take us to? To new all-time highs? We don't know. I don't know. Do you know? We're trying to fight to get above the 200 exponential and simple. We're trying to flip the slope back over. We did it once, couldn't get above that level. We put in a higher low. Market participants rebuying that low, just like you and me, okay? Moving to the upside now. Momentum continues. 121 is the target. Now, realistically, when we get there, there's going to be some selling. There's going to be some resistance. What we're looking for is we'll likely take some profits. 40% to the upside. We'll likely take some profits. But what we're looking for is if we push up here, let's get out the squigglies. Make sure that we're all on the same page. If we push up here and do a little something like this, okay, that's it. That's what we're looking for. We want to consolidate at that resistance, put in like a little mini higher low right here, and then we're looking for the burst. Now, is it going to happen? We'll wait and see. I mean, we've been getting awfully lucky for like the last couple years. I mean, even if we just count this year, we've got lucky a lot, guys. The 8-ball is working. So is it going to happen again? Probably not. Our luck's all run out, but could work. We'll see. What is this trash? I've never heard of it before. GME? What is this thing? What is this garbage? So it had that gap up. So this is the real danger right now is this giant air pocket from that gap up. And it's the same thing with Lululemon. We'll talk about that in a second. 21% downside if we just close the gap. And it was a perfect backtest of that descending channel and the 200 exponential and simple. Could it break out right here and hit the measure move to the upside? It is possible for like 200% move. But I'd be real careful right now. I mean, we did get that double bottom right here off the 382. So maybe that was it, but I don't know. The E is green. What does that mean? Breakout? I don't know, guys. Could go either way. I'll be real careful. So Lulu. So we saw that little burst, that little sunburst, that little gap up right here. Nothing crazy though, because look, this was what we were talking about before. Why we were playing that is because this was our gap down. This was when it broke down massively and then continued selling. So it left this big gap from 374 down to 344. And then we gapped up today. And where do we gap up to? Oh my gosh. We closed the gap. Well, part of it. There's still a bunch of gap below us right here. And now, of course, there's a massive gap all the way back to the 200 exponential at like 321. So it was a beautiful play. It was a nice little rocket, 12 to 15+%. But we don't know what's going to happen after that. I mean, there's a bunch of air below us. So it would make the most sense that we would just sell off some and basically just finish closing this gap. So that's what I would think is we're going to come back down here, finish closing the gap at like 344 or somewhere around there. And then maybe we can run and this can be a breakaway gap. But we do still have this massive gap now, below that. And remember, okay, a lot of times people say, oh, I was in this trade and then my stop loss got taken out or whatever. Wick came down and took me out at the absolute bottom or the absolute top or whatever. And that just means you're not doing a good job setting your stop loss. Because if you set your stop loss exactly at the 236 or exactly at the resistance right here, you would have got taken out on that. But we never actually closed outside of our, measured stop loss zone, which is why we didn't put it right here, because that's where the support is. The last thing we want to do is get out of the trade at the support. No, of course not. We want to get out of the trade, at the resistance. We want to get in the trade at the support. So you could have easily gotten a way better entry than I got on this. And all you had to do is just buy any other time, other than here, here, or here. I mean, but at this point in time, there's nothing left now. You can't get in this one too late. We do have this resistance right here in white as well, which is exactly where we're at. And then we also have that 618 for that internal retracement from the top to the bottom. So it is very, very possible that this is done and it's just going to roll back over. We'll have to see. So, and again, we don't want to hesitate to take profits. If this thing starts breaking back down and, starts closing below this 0.5 in orange, around like 350 or whatever, like we don't want to just ride it all the way back down and give it back up. Nat gas, we want to look at this one because obviously, and remember the narratives. Everybody's got a great narrative about why nat gas is always going to be so expensive. And remember your boy in early winter was talking about how nat gas prices were going to crash and why nat gas prices are going to crash, because everybody bought the absolute top. All the governments, all of Europe, they all loaded up on nat gas at the absolute top because it was going to be a cold winter and everybody was going to freeze and there was going to be no food and they weren't going to be able to afford the bills and everybody was going to die. Well, sure, the bills were up. It was expensive. It's still expensive in some places. But oh, look. It's like literally trading at like some of the lowest levels ever. I mean, the entire time from 2015 till the breakdown in like 2019 for like 4 years, we touched this level like once, twice. And then we had a little breakdown where we consolidated, formed this W below where we're at right now. So you want to see the 886 do some real work? This is your chance, okay? Because from the low right here all the way to the high, gave back the entire move. I mean, so we're basically back to where we started. So all that fear, all that nat gas, you know, we need it and blah, 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 and all that narrative and all that. Where's it at now? Why isn't anybody talking about how wrong they were about nat gas? How, you know, I mean, this thing traded like a cryptocurrency. What is this because of? This bubble fear. There's only one thing that makes something go up that much. It's bubble fear. People were afraid that they're going to die, freeze to death. No one's going to be able to get nat gas. That's what caused a bubble like this. And now, of course, it has sold off massively to the downside. And it's likely to print some bullish divergence here on longer time frames. Now, of course, it's catching a falling knife because the same people that, you know, got wrecked by on the way up were trying to buy the falling knife on the way down, getting wrecked as well. So I'm not saying this can be the absolute bottom right here, but this is the area I'm watching. Right around like $2, call it $1.91, whatever. And you know what? We don't even need to go to new all-time highs. This doesn't need to do anything impressive. Let's just say, hypothetically, that, go ahead, say it, we're right again. Hypothetically, let's say we're right again. Okay, and we come down here exactly at 886, and the 886 makes me look like a fool because it actually does its job and does something for once ever. We bounce to 886, we push back up. You know, first target 236, $2.80. Second target 382, $3.60. Next target 0.5, $4.42. We're talking about like, you know, potentially 100% move back to the upside and back to like reasonable levels. Like it's not crazy to think that like, hey, we're probably going to like continue trading somewhere around like the range that we have traded for like 99% of like existence. You know, arguably you could say that's like the resistance right there. We came down, acted as support. We lost it right here. And now we're just back inside the range and we're at the bottom of the range. And what do? We buy support, we sell resistance. So we're going to buy at $2. We're going to sell at $3.63. Congratulations. You did it. You're a trader now. Okay. I want to do some static videos on a couple of these other ones right here. So we're not going to hit them in this one, but look out for those in the next like day or two. As a matter of fact, I want to get them both out in the next couple of days because they are some good tickers. And then we got like the AI stocks and stuff. Nothing crazy going on there. Let's look at BBAI really quick. Big Bear. Again, we had that air pocket right here from that gap up. And again, the gap up is technically all the way to here. We closed part of it with that candle, closed part of it with the next candle. We came down and closed most with the next candle after that. So now, you know, we came down a little lower than that. So we have basically closed part of that gap, but we still have a big air pocket right here. So we bounced it perfectly off the 618. We back tested the 0.5. We're still below the moving averages. We are above that yellow, not beautifully, like perfectly drawn support line. So it looks okay for right now, but we're definitely still in the danger zone. If we do come down here to revisit the 618 again, I'm looking to buy that 786 or potentially that 886 is just really popping up lately, isn't it? So we'll see. But I just can't get into this right now. If it was on top of the 200s and then we're sloped to the upside, maybe. But there's like a 58% like just like guillotine hanging above our heads. So I'm not going to stick my head in there. It looks kind of shaky. It's like swinging in the wind a little bit. No, thank you. Not going to be me. Someone else, though. You can pick whoever you want. Preferably someone in power, a government or a central banker or something like that. We'll give them a shot at this one. I'm not jumping in on Big Bear AI. Not yet. It is worth noting, though, we do have the buy, the sell, the buy. It's kind of ugly, bunch of green histograms, though, so we don't want to write it off. I'm also looking at the Bitcoin chart, not right this second, obviously, but one thing I'm looking out for on the Bitcoin chart, and it's not like it's hard to just go look at it right now, there is a signature that happens. This is a bonus for those of you that hung into the end. all the weaklings are going to lose all their money because they missed this one part of the video. Suckers. Okay, so we did put in a sell right here, and it looks like we're going to try to potentially push up to the upside, create some more bearish divergence, whatever. But often what will happen is we'll get the sell, the Stoch will curve back to the upside, it will cross just for a second because the pink one will be like rolling over, the blue one will, you know what? Let's get out this drawing tool. The blue one will start like pushing back up to the upside like this. Hypothetically speaking. And then this one is like already rolling over. That's our pink one. So now this is going to print a hard buy signal. Hypothetically speaking, of course, we don't know what's going to happen in the future. No one does. We're just really good at pretending. It's probably the magic 8 ball though, honestly. So then it prints the hard buy signal. So then we have a hard sell. Then we have a hard buy. And then actually what happens is this prints bearish divergence because it continues to roll over after that. And then starts to go down. And actually when that happens, we cross one more time. And then I just put a random thing and get rid of that. So there we go. So that's it. That's our hypothetical scenario that could play out. And when that final print plays out right here, that cross right there, that gives us, that's right, you guessed it, the divergence signal. The sell, the buy, the sell. The opposite of what we just saw in Big Bear AI. And that is a divergence signal, oftentimes coupled with divergence from the peak here, and likely the histogram oscillator for the TDMACD as well. But I mean, it's never going to happen. You can't just predict what the market's going to do and like movements and stuff like that and signatures. It's not possible. So I'm just throwing it out there. But I mean, if it does happen though, don't be surprised. So, all right, that's it. Ooh, we did it. We made it to the end. We looked at the Bitcoins. We gave the altcoins a hard time. We saw the dollar scenario and what that looks like and how we could have persistent inflation, the exportation of the inflation. Yeah, all that good stuff. We didn't get super in depth about how that's going to affect the actual United States, more so like investments and where like the money would flow because of it. But we can get into that on a static video or something like that. Neo, so far so good. That's right, my friend. It is so far so good. And I don't even remember who brought up Neo a while ago. And same thing with XRP, man. I mean, a lot of times you guys will bring up something. I might josh you a little bit or bust your chops, you know, for digging through the trash. But you know what? There's nothing wrong with that. You can dig in the trash if you want. Just wash your hands afterwards. Use hand sanitizer. And don't you dare put that Neo in your mouth. But anyway, God, if you don't appreciate my sense of humor, I mean, I'm sure you're not here right now because it's got to be unbearable. But regardless, yeah, it's fun. You guys, you're my eyes, you're my ears. I mean, people always talk about like if someone has a good strategy, they'll never give it away, as if like only so many people can have it work. Well, the truth is with technical analysis, if you have a good strategy, it works because other people are doing the same thing. So I have a vested interest in as many people as possible using this strategy. My strategy, the strategy, our strategy, whatever. And it's the same way with charts. Like you got to start looking at it, looking for uptrends, looking for those 200 simples, looking for the positive slope, looking for the divergences, looking for the, you know, all that continuation, all that stuff. You might point out some asset I never look at. You might point out one that I hadn't looked at in a while. I mean, we're a team. You guys are the eyes of the team. You know, I have literally 2 eyes. You guys each have theoretically around 2 eyes as well, give or take. I mean, hopefully, probably take. I think there's probably more of you with 1 eye than there are with 3. Now, I can't say that for sure, but I would imagine that statistically that's like a fact. So we'll go with take mostly on the eye thing. But yeah, you're my eyes. So if you guys are out there looking at charts, you see something cool, you see a ticker, whatever, you know, throw it up in the chat. Not now though, because we're wrapping up. This is the wrap up portion of the stream. But you know, for the next one or whatever, or requests, or obviously in the group. But yeah, I mean, I might shame your like horrible, terrible crypto trash that you brought up, or some ticker that's no doubt a horrible, horrible chart, I'm sure. But it doesn't mean that there's not trade set up there. So it's important to remember that when I'm talking trash about an asset, it's usually not because of the fundamentals. It's almost always because the technicals look like garbage. Now, don't get me wrong. I take some liberties sometime and have fun with the fundamentals as well. But most of the time, the idea of being mean to assets that look like trash is we remember that we're mean to them because they look like trash. And then when they don't look like trash anymore, we're not mean to them. So as things start going into bull markets, you'll notice like I went from being, very negative on cryptos and talking a lot of trash about them all through the bear market about how they're all going to zero and they're complete trash and all that stuff. We still traded them the whole time, but we were able to keep our sentiment where it should be. Bad, because they're trash. And then as we start, moving into the bull market, I mean, we didn't buy the exact bottom, but, we bought the bottom pretty much, and then we bought the bottom retest on the 200 simple pretty much. So pretty much nailed it. And now the sentiment's a little better. We're a little less mean to them. You know what I mean? It's like that ex-girlfriend, but we like still want something. So we're like cordial. And then who knows? I mean, things play out, start going the right way. Bitcoin starts whispering sweet nothings in my ear. Maybe some of these trash cryptos start putting some gains in my pocket. You know what? I might give it another run. I might give this crypto another shot. So that's it. That's my mentality. It works good for me. So some other people, I'm sure it's not good for subscribers because people are like, no, don't talk shit about Cardano. Cardano's great. Charles is our god. But, I'm just being honest. If charts look like trash, it's a trash asset until it's not. All right. Well, that was fun. I had fun. Did you guys have fun? Smash up that like in the chat or put yes if you had fun. But it's 10-second delay. I might be out of here by then. So, but yeah, we'll go ahead and wrap it up there. That was fun. Had a good time. Whip through some assets. Look out for those 2 static videos. I got one coming up. If you're like a super secret like ninja, you could probably see what the tickers are, but you can just wait till tomorrow. So I'm sure they're not going to just jump up 15% overnight and then you're going to be pissed. I don't know. They might. But yeah, just remember, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. It is 9:24 p.m. Eastern Standard Time on March 29th, 2023. I'm Crypto Trend Trader, and I'm getting the F out of here. Appreciate y'all tuning in. Hopefully everybody had some fun. Look out for those static videos. I'll try to pop one out tomorrow and the other on Friday, earlier in the day, in case anybody wants to enter. But more than anything, they're not like, we got to buy them now, hurry. It's more like, these are on my list and you know what? I'm going to give you guys a little spoiler, okay? For those of you that are still hanging around. They're 2 dividend stocks, and they pay thick and juicy dividends. And fundamentally, strong companies as well. So a little wet your whistle with those. All right, later.